very much for joining us today. We'll be discussing how small businesses are navigating climate resilience and sustainability through digital finance. My name is Janet Schulist, and I'm a Senior Insights Manager at Caribou. Caribou is a global consultancy that partners with ambitious organizations to reimagine and deliver impact in the digital age. For the last decade, Caribou has been supporting governments and organizations with climate resilience and sustainability, particularly from technologies such as Earth observation data. More recently, we've increased our focus on small businesses, looking at how digital technology and financial solutions can support climate resilience and sustainability. Small businesses make up the biggest proportion of businesses around the world, and they are often more vulnerable to climate impacts. So today we'll be talking about the role of digital financial services in addressing these vulnerabilities for small businesses. So it's my pleasure to introduce our panelists for this session. We have Dr. Annabelle Beals from Business Fights Poverty. We have Tilman Trumpka from Tilt. We have Neliswa Hare from Humanity Insured. And we have my wonderful colleague, Hannah Laufer from Caribou as well. So before we begin, I really want to encourage those listening in today to please add your questions and comments into the chat, and we'll dedicate some time in the session to answer these. All right, so today we're talking, of course, about resilience and sustainability in action. I'm going to call on Annabelle, Tilman, and Nelly to start us off. We'll keep things a little bit spicy by keeping responses between 30 seconds and 1 minute. And I'm curious to know for you all how you kind of define climate resilience and sustainability for the small businesses that you work with or in the work that you do, and how your organization puts that into practice. So we'll start with Tilman.
Hi, everyone, and thanks for the intro, Janet. It's a pleasure to be here today. And to start off with the question you asked. So for us, being sustainable or climate resilient as a small business means, in the first step, to have the awareness and knowledge about risks for your business from climate change, for example, but also about the opportunities from climate actions. And also about the financial means that it needs to implement climate action. So ideally, a small business goes beyond simply awareness and also has climate actions already, concrete climate actions implemented, and a climate transition plan set up. And this is where basically our work with Tilt starts, because we, as a data solution, provide data insights that can be used and can enable small businesses to get the know-how about most effective climate actions, but also get the funding they often lack for climate actions, and then set up with this know-how and this financing a credible climate strategy for their businesses to transition towards a sustainable and future-proof business model.
Thanks, Tilman. Nelly, how about yourself and Humanity Insured?
Yeah, so Janet, thank you so much for the question. And I guess firstly, I'd just like to tell people a little bit about who Humanity Insured is. And basically, we're a not-for-profit organization, and we use the tools of insurance to protect people that are most vulnerable from climate shocks. We mobilize funds to make insurance accessible to those who need it the most, so that when these climate shocks hit, drought, floods, heat, people can plan, rebuild, and recover. So when you ask the question, how do we put it in practice? So I guess for us, climate resilience means the ability for organizations to be able to absorb a shock without losing the foundation of their work, right? So to be able to rebuild after a flood, to survive after a drought, or to continue to trade, or to even feed families and employ others. And we bring this to life through parametric insurance, which is a form of insurance where payouts are triggered automatically by data such as rainfall or heat or wind speed, rather than lengthy claims of processes. And a quick example is in India, we work with an organization or a cooperative of a woman-led organization supporting low-income home-based workers affected by heat or rising heat. So many of these women are garment workers. They process food from their homes. So when the temperatures go high above a certain threshold, they simply cannot work safely. So through a heat index insurance product, we were able to automate payouts linked to the temperature data. So when a heat wave hits, they can receive cash support to cover the woman against loss of income, or take preventative measures like cooling of their homes. So that's how we do it from our perspective. Thanks, Janet.
Thanks, Nelly. That's so interesting. And Annabelle, how about yourself in Business Fights Poverty?
Oh, thanks, Janet. And it's really lovely to be here in this conversation. So Business Fights Poverty, we're a global community of companies and organizations and people working for an equitable, resilient and sustainable future. And we work a lot with multinational corporations and global value chains. And so for us, when we're thinking about climate resilience or sustainability, we have a very strong focus on bringing the people into the heart of environmental and climate action, particularly looking at issues of equity, social equity, and also decent livelihoods. And so for an example, as you know, Janet, my recent work that I've been doing is a partnership with MasterCard Strive, looking at how digital financial services can support climate resilience for micro retailers. And they're obviously very important to global value chains and resilience for all of us and for communities and economies as well. So in that context, we're defining climate resilience as the ability to withstand climate-related disruptions, avoid long-term hardship, and sustain decent livelihoods.
Wonderful. One of the things sort of we tend to find is there's limited data on small businesses, including their sort of needs, barriers, and perceptions regarding digital and green transformation. So Hannah, Caribou has recently launched research in the EU to better fill this gap. And I'm wondering if you can share, what are some of the early findings around the needs and barriers of small businesses as they embrace these digital and green solutions?
Yeah, Janet, thank you. I've got a lot to say, but I'll try and keep it concise. So first of all, we recently launched the EU Small Business Snapshot Study, that's what it's called, including more than 1,500 micro businesses across 23 EU countries. And when we say small businesses in the EU, that refers to micro businesses, so solopreneurs up to 10 employees. And we've done this because in the EU policy conversations, especially around the green transition and the digital transition, it's often the focus on SMEs. So we were asking deliberately micro enterprises about the progress with and perceptions of, AI, cybersecurity, and sustainability solutions. The EU-wide data just came in, so I'll invite anyone interested to join the early sense-making workshops to please email me directly. Today, I can share preliminary headlines from Romania, which is one of our Innovation Fund's target countries, and we have already done some preliminary analysis there. So what surprised us maybe is that small businesses see an immense strategic value in sustainability solutions. So 60% of the respondents actually said to us that sustainability is highly or critically important for their competitiveness, with another 20% saying it's moderately important. So for us, this signals a wide understanding that sustainability solutions are drivers of growth and maybe also stability. And then we were also able to classify these small businesses that responded based on their attitudes, intentions, and adoption of solutions into the hesitants, the middle, and the curious. And we're still working on this methodology. But what's remarkable is already the size of the gap between the hesitants and the curious. So hesitants virtually use zero solutions, sustainability solutions, have no intentions to invest. And the curious are using on average already 2 solutions, are planning to increase investment in the next year. So this gap's quite wide, and it sort of correlates with traditional sectors, business maturity, distance from urban centers. But we're also testing whether a gender effect remains robust. At the moment, it looks like women in leadership appear more likely to be sustainability curious. Maybe in terms of support needs, there is very different barriers, it seems, for these different groups. So hesitants are 4 to 5 times more likely to report that solutions are too complex. They don't know where to start. The value is unclear. And if you talk about the middle or the curious businesses, it's more about there's policy complexity, policy is changing, and also internal capacity constraints. So this already tells us we need like targeted support and need to think about micro businesses in a more sort of differentiated way. Mm-hmm. The last finding, maybe quickly, is that we're looking at the nexus between financial health and digital maturity in these businesses. And it needs more investigation, which we'll do in the EU study, but small businesses are that report a significant financial strain or that are feeling financial pressure use comparatively half as many digital solutions as the ones that are more financially sound. And this is somewhat expected, but when you look at it from a different angle, in addition to missing out on digital market opportunities by being less digitally mature, there's also a positive relationship between digital maturity and awareness of and access to alternative financing mechanisms. So that can include green finance, embedded finance, working capital. So the businesses that might actually most urgently need access to alternative finance, digital, innovative financial solutions, are often the least digitally mature, and they are then in turn at least also the least aware of these new financial services. Again, there's too much to talk about, so please keep in touch for more insights to come.
Yeah, it's exciting to see these insights coming through, and absolutely we'll share a link to sign up for those sense-making sessions if that's something that the audience would like to participate in. Tillman, Tilt has spent a lot of time also understanding the needs and realities of small businesses with respect to sort of targeted climate finance related solutions. Your research highlights that sustainability tools are often too complex for small businesses and not really designed with their needs in mind. So how are you thinking about that when you're designing Tilt to be both rigorous from the sustainability kind of lens, if you will, and simple enough for small businesses to be able to use them and navigate them?
Yeah, thanks, Janet. And first of all, I want to say these insights from this EU small business snapshot study sound incredibly interesting. So looking forward to read it all and compared to what we find basically. Because as you say, Janet, we received, so okay, let me go one step back. In the past month, also with the support of Mastercard Strive, we were able to talk to more than 100 financial institutions and over 60 small businesses to learn more about the sustainability challenges they are facing and what they actually need to solve these challenges. And what we learned from these interviews and also additional market research that we did is that the ESG data segment, and something you also mentioned already in your intro, Janet, the ESG data segment for small businesses is completely underserved. It's very difficult, if not impossible, to get good ESG data about a small business. And to collect or create these data by themselves is often very resource intensive and cost intensive for small businesses. There's interestingly also a recent study which was published that analyzes findings from a larger EU survey, which concludes that costs for ESG data collection for micro businesses in the EU terms, which is basically the same as small business, how we use the definition, that the cost for ESG data collection ranges from 4,000 to 10,000 euros only for the small businesses, which is a lot of money for small businesses, especially in the current times where market dynamics are quite demanding in at least some countries. So this means data collection is complex. It's expensive. When we talk to the small businesses, they basically say exactly this. So that they need that it's too time intensive for them to use these tools. And often the problem is not only the complexity, but also that many tools still focus on simply providing data about the status quo basically of the company. So what is your emissions, for example? but what small businesses actually need is guidance on what they can do to improve. And this is where Tilt basically comes in. So we developed a solution, a unique approach that only requires very minimal data from a small business, to connect this with climate and sustainability databases. And through this approach, we are able to basically provide ESG data, such as emission estimates for large scale of small businesses. But we don't stop at simply estimating the emissions. We also provide with our solution data on the emission reduction potential of a small business and which concrete climate actions a small business can take to reduce its emissions. So basically our approach is highly automated. We use data that are already out there from company data provider, from different sustainability databases, and put them together. And in the end, we provide insights that can really help a small business to shape its climate strategy, or can help a financial institution to identify the right small businesses, to engage with them and support them in the transition. Because that's maybe something also important to know for those who don't know Tilt yet. Tilt is a solution that's designed for small businesses and financial institutions as these two target groups.
And it's a really innovative approach. Thanks, Tillman. Another innovative, approach is really coming out of Humanity Insured. And, Nelly, you guys launched just over a year ago, making, insurance accessible to those impacted by climate volatility. I was wondering if in your, first year, if you have any challenges or lessons or reflections that you'd like to share in terms of your partners and how you've been supporting climate vulnerable communities with innovative insurance.
Yeah, thanks, Janet, for the question. And, for us, it's been a year of deep learning. Even in thinking about our impact report, we're calling it a learning report because it's just been that kind of year for us. And I guess the first challenge, because we are talking about insurance here, right? So the first challenge has been trust. People don't generally trust insurance, right? Whether it pays or it doesn't pay, people don't trust it. So many of the communities that we've decided to work with have been communities that have never interacted with formal insurance before. So we've had to spend time with our partners, listening and building understanding from the community's perspective. People often ask us the question of, why should I pay for something that might not even happen, that might not even pay me back? I want a little bit of something rather than nothing. And that's where we have to, with the projects that we are doing, we have to demonstrate transparency. And that's why parametric insurance makes sense. And we have to also educate people about how it works, when it triggers, etc. So we've spent a lot of time building the trust, and especially choosing the communities that we work with very, very carefully, so that they are working with organizations that they already trust. So that could be just one. And I think the trust thing on insurance could be anywhere around the world, not just in those communities that we work with. The second challenge has been around basically the design of the insurance, because you can't essentially take an insurance product that has been designed in London and just put it in a community in Malawi, for example. And in particular, there's something that's called basis risk, which our CEO always speaks about in insurance. It's basically the gap between the data, what the data says, and what people feel on the ground. So, for example, the satellite may show that enough rainfall has happened so that it cancels out the payment, but the farmer's crop might have still failed because the rain came too late, in an example. So that mismatch can also erode trust. So So somehow to manage this kind of basis risk, we've learned that it is important to think about insurance differently and co-design the triggers with local partners, validate the models on the ground with the data, and just really be open and transparent about what we're covering and what we don't cover. So it's just an open and an open conversation. Basically, it's not even a data one. It's just being human and being open about what is what, and just to also understand that people experience loss differently and being able to measure that. And in some of our programs, we've created these pools that. For example, insurance usually looks at a 1 to 20-year event, but these pools that our teams have put together are 1 to 3-year events, which it's not quite insurance, but it is in its own way, and it serves for people in the communities in which we operate and are looking at what's going to happen tomorrow, because a climate event will impact me. It's between that person going into poverty and not the next day. So creating those different kinds of pools has been really helpful in context of the communities. A third lesson I would say is around what we essentially are here for, which is around subsidy. So the premium support, which we think is vital at the start to make insurance affordable. So sometimes it's not always about affordability, but willingness to be able to pay for that insurance. But we have to think about how it becomes sustainable. So we've thought about like shared contributions from potentially humanity insured, sometimes from organizations with supply chains, which could support farmers, for example, from philanthropists, social invested. So thinking about like a blended way of how the contributions can be shared could be a future way of looking at the shared contributions. And then finally, I think we've learned to measure success differently, or we're learning basically on how to measure success differently. Because I guess sometimes resilience isn't about the payout itself, right? People always think about the payouts, and it doesn't always happen. So we have to be thinking about what does that resilience look like in this community? Is it about a woman not selling off her goat because she has insurance, right? Is it about a business not shutting down because they can build back? Isn't about embedding insurance to loans so that a farmer doesn't have to default on a loan. And so thinking about that in quite stability is the most powerful way of thinking about our impact. And so lots of things, deep learning year and some there.
Wonderful, thank you. Annabelle, some of the forthcoming research that Business Fights Poverty will soon publish, introduces a framework for financial service providers to use with respect to climate resilience, and it's kind of fortify, navigate, and recover. Could you tell us a little bit more about this framework and how FSPs can apply it? And then maybe a second question for you is around which of these three phases do you think that the financial service providers are most prepared or least prepared for to address, and why?
Oh, wonderful question. Thank you. And it's so great to hear all the examples of humanity insured and what's happening already. So yeah, this report looked at, as I said, it looked at digital financial services and how they can help micro retailers to improve climate resilience. And it was particularly focused on Southeast Asia, but I think it does apply in other places as well. I think first thing to say is that sort of micro and small businesses, retailers are really being affected by climate. Southeast Asia is a region that is very affected by climate, particularly typhoons and flooding and things like that. And a brilliant report actually by the Centre for Financial Inclusion earlier this year did a survey of small businesses in 5 different cities and found that 1 in 3 of them had been impacted by climate disruption in the last 3 years. So it is a pressing issue for businesses, and it can be loss of property and stock, loss of income, disruption of supply chains, increased costs, and obviously sort of the health and safety implications for workers and business owners as well. So the framework is sort of given out to hopefully help people working within digital financial services providers to think through how their existing offerings and what more they could perhaps do to support climate resilience for small businesses. And it's got, as you said, it's like a cycle. It's got 3 phases. The first one is all about kind of fortifying the businesses and really building up a buffer. So I think this is probably where financial services will feel most comfortable. It's about financial resilience. It's about good management practices, maybe integrating digital payments or platforms to give more flexibility, trying to build up a small amount of emergency savings, getting good records in place to if they need to access credit later, but also things like facilitating access to climate resilient assets like perhaps solar energy, or perhaps adaptations like heat reflective roofing that can reduce the impacts of heat stress. So that's sort of the first phase, and I think probably within the comfort zone of a lot of inclusive financial services providers already. The second phase is navigate, which is really about the days or weeks leading up to a predicted climate disruption and then the weeks following that. So I think this is definitely where probably financial services providers will feel most at sea. They're not governments and they're not humanitarian organizations, and this is probably not within their sort of field of expertise. But the UN has said that giving 24 hours of warning can actually reduce damage by 30%. So there's a lot can be done to help small businesses prepare for an oncoming disruption and to help see them through that. And I think although it's perhaps scary to do, it is an area where you can really build trust and loyalty, because if people see some financial services leaning in and helping communities and other ones pulling back, that really I think will stay, I'm hearing it does stay sort of with people and businesses for a long time in terms of their experience. So things here are, simple things like perhaps putting a pause on loan repayments for a few weeks, maybe even structuring loan payments around a rainy season that comes every year. So there's going to be disruption, build that into your repayment plans. So facilitating really quick access to savings and emergency loans when they're really needed. And then insurance as well. I'll maybe say something about that later, but I think Naniswa, you covered that beautifully. And then also the third phase is the recovery phase. So once people are through that initial shock, surveying the damage and rebuilding. And I think here is where things like recovery loans, really strong business advice, and helping people with, tailoring business continuity plans for the future based on the experience of what's just happened. And actually, this is a really good time to talk to people about insurance. The same study by the Centre for Financial Inclusion did reveal that people who've experienced a climate disruption are more likely to be open to things like insurance because they understand the benefits of it. So there's lots of conversations and learning that can happen at that phase as well.
Thanks, Annabelle. Tillman, your solution, as you mentioned earlier, is designed for both small businesses and financial institutions. And I'm wondering, what are some of the challenges that you're seeing from, the small businesses, but also the financial institutions when it comes to implementing these sort of green finance sustainability solutions?
Yeah, so looking at the challenges for small businesses and financial institutions, there's this one core challenge that is the same basically for both sides, and that is really the lack of actionable data, the lack of data that help to understand the climate profile of a small business and that help to understand what the small business can do to become more, to decarbonize their operations, basically their business. And so why do both sides need these data? Financial institutions have, on the one hand, a regulatory pressure to report emissions, for example, their Scope 3 emissions, for example, which also entails then emissions from their SME loan portfolio. But they also have the business opportunity if they can, with the data insights we provide, or with useful data, they can increase their loan portfolio by supporting small businesses in the transition to net zero through green lending opportunities, basically. And on the other hand, you have the small businesses that need the data to first fulfill data requests from their partners, for example. So when we talk to small business, we learn, even though they don't have direct regulatory pressure yet, many stakeholders or customers, clients, banks require data from them already. So we provide them, we can provide them with the data to reduce their time and efforts to get this data. And then also, in addition to that, the second use case is also for small businesses to make their businesses future-proof and climate resilient. So this is the connecting core challenge, and our product explicitly target both sides of this problem, because we see a huge chance and potential in banks, for example, and small businesses to work together in some sort of a tandem partnership. So because financial institutions have the financial means and the expertise, small businesses need financial means and the expertise. And by coming together through the data that we provide, we can enable financial institutions to identify the clients that are most suitable to transition to reduce their emissions through effective climate actions, which gives the banks a smaller scope 3 emissions and an increased loan or increased market share in the green transition financing sphere, and it gives the small businesses the measures to be future-proof, basically.
Fantastic. And Annabelle, I guess back to you in terms of where do you see the biggest gaps in existing digital financial products that are kind of being used by micro retailers in terms of resilience?
Okay, so I mean, the first thing to say, I suppose, is that there are lots of really good tools out there already in terms of, digital payments, digital platforms, digital savings accounts, loans, and to a lesser extent, insurance. That's sort of something I think that's being explored, and particularly within the agricultural sector, but maybe hasn't made it over to sort of widespread use yet. So I think, the building blocks are there, but it's really about thinking about how they can be used with kind of putting a climate lens over the top of them and making them really accessible and designed to meet the needs and preferences of small businesses. Because as someone's already said, designing something in London necessarily isn't going to work in all locations. So really having that kind of design thinking approach to it. What I would love to see is more kind of sort of structuring and bundling of products with a climate resilience lens. So things like, could you bundle in for free weather indexed insurance with a business loan to cover payments if there was an extreme weather event? Or could digital payments platforms maybe partner with training providers or meteorologists to provide, climate risk information, business continuity training, or providing information about upcoming weather events? So that's one area. And then another one is sort of how we use knowledge and data both within digital financial services to look at portfolio risk of the providers, but then also how we do credit scoring. And there's all kinds of inventive ways that we can use data, whether it's recommendations from local agents or existing reliable customers or sort of stock inventory data, to help people build up credit ratings and sort of access digital financial services and keep costs affordable as well. And then the last point I would say about this is really, I think there's an opportunity and an incentive really to work with governments and maybe telecoms companies and other partners on that sort of systemic resilience. Because, if you don't have power and you don't have internet, digital financial services won't go very far. So how are we designing products that bear intermittent access in mind? And also, how can the financial services sector work and partner with governments and others to really build that resilient sort of infrastructure that is needed, which will benefit everyone as well as small business.
Yeah, it really is so critical. I think too, I'll just pause here to remind our audience that if they'd like to submit any questions, I think after this next one, we will turn our attention to those. And also, I think if you have any interesting examples from your own work or things that that are tailored to micro retailers and small businesses, that'd be really interesting to kind of learn from your perspectives as well. Hannah, Caribou, we know really works closely with innovative startups and scale-ups in the EU to support small businesses in increasing their sustainability. And, Tilt is one of these solutions, among many others. From your perspective, how can digital finance providers and the wider financial inclusion community better support these startups and organizations who are often, designing these solutions with micro retailers and with, micro businesses in mind?
Thanks, Janet. I think first that framework was very interesting, Annabelle, and it often sounds very far away from the EU, but we work with sustainability innovators, as Janet says, who find that micro businesses have started to feel the effects of the climate crisis even in the EU. For example, our innovators working in the tourism sector, campgrounds, ski resorts, tour providers, who are now struggling to diversify and adapt. So it's not very far from home at all. I'm obviously just the messenger here working with these brilliant innovators, but I think one critical use case for small businesses to adopt these solutions, and more importantly, to then act on the guidance that is so nicely prepared for them, is access to green finance. And I think we've repeatedly heard, maybe, for example, from our Swedish partner, Ragnar, that small business owners consistently tell them that they're willing to act if these tools help them gain access to funding to help them act. So there's also another example from their research where they've told us about a French bank that they spoke with in the early stages of their research that told them that they had recently manually called hundreds of SME clients to inform them about their new green loans, right? And so there's this gap that Ragnar and Tilt can fill by making these opportunities to funding green finance visible and accessible, and maybe even embedding them in their solutions. So there's this very natural collection point. And I think also it's very decent of the innovators to think about sustainability almost on behalf of the banks at the moment. The use cases are becoming clearer, improved risk management, improved compliance and reporting on behalf of the FIs, but also product innovation and customer engagement value in the longer term, I think. So as a financial institution, I think opening your door to innovators focused on sustainability and maybe giving them an opportunity to pitch their solution, but also to guide them through their needs and sort of the way of thinking of financial services providers, perhaps offering a pilot partnership. I think those are great ways to start thinking about this and creating value for the customers. And I think also, the banking associations, right, they can facilitate these exchanges a little bit better, encourage maybe first movers to engage with these innovations that are more adjacent to financial services. Yeah.
Fair enough. Nelly, looking ahead, what innovations in digital finance or what partnerships do you see as most critical for scaling affordable climate insurances to small businesses at risk?
What partnerships? I think the first thing when I think about, what would help the micro enterprises to be able to adapt to these types of insurances, I think for us, the first thing is around affordability, right? If we can work together to reduce the costs of these small businesses being able to access the insurance in the meantime. So having partnerships that are able to do that, it could work, right? Because insurance only works if people can actually afford to stay covered. And I think we've also spoken about, and I've mentioned this before, but like partnerships that can help us to actually make it simple and transparent. Usually when people talk about insurance, it's the paperwork, it's how it works. So like, are they organizations that can help with these parametric triggers to make them much more simpler, so that people can understand what they're getting into, so that it can build confidence quickly for people. And And I guess lastly for us is just to partner up with organization cooperatives, women's saving groups that are really trusted in their communities. And that's how we're going to scale, right? Because if people, you can't just go into a community with people and saying this is something that's going to really work. But if they are being told by a cooperative that they've been member of for years and years, giving them confidence that this is something that can really work, it will help. And maybe just one last partnership. No, I said that was the last one, but just partnerships that help us tell the story. Basically when people receive payouts quickly and they are able to do something, and to be able to spread the word, and so that people can understand how it works and how it's been able to impact it. But we need people that are good at that to be able to partner up with, which would make us scale. Because people in insurance, people won't believe it until they see that it works, so we've got a lot of work to do where that is concerned. And I guess it's not just in the communities, but you ask anyone, nobody wakes up in the morning saying, I want to go buy insurance for this. We're very excited, but we're trying to kind of use the tool as a way that people can build insurance and resilience rather. So being able to build those different communities partners will help us to scale.
Yeah, fair enough. And I think to your mention of women's savings groups it reminds me of Annabelle, your research, which kind of highlights that women make up a significant proportion of micro retailers, particularly in Southeast Asia. And they, of course, face very gender-specific constraints. What did you find most interesting in terms of how climate risks affect women entrepreneurs differently, and what that might mean for designing solutions that meet their needs?
Yeah, really good question. I think we often hear that climate impacts women differently, and there are health risks. There's that kind of common statistic that women are 14 times more likely to be killed in climate disasters. They're more likely to be displaced. So obviously as an entrepreneur, this is incredibly disruptive and difficult. And on top of that, climate change is also increasing the care burden, which disproportionately falls on women. So really, it's sort of looking at the time and energy that women have for their businesses, and climate change is one of many factors that is causing additional difficulties. I think one of the things that perhaps I hadn't really thought about before was the sort of impact of climate change on actually raising gender-based violence levels, and then the impact of that on how women interact with digital financial services. And there's some really interesting research done by the Cherie Blair Foundation on that, which I'll post in the chat in a second. And also in terms of how women are also more likely to be thinking about climate risk, probably because a lot of it falls on their shoulders, but they're therefore more likely to be open to ideas like insurance, or ways to protect their businesses, but they lack confidence often in using digital finance or digital technology in general. They may be less likely to have access to digital, less likely to have access to the internet, and also less likely to be included in formal financial systems anyway. So I think there's a huge amount of potential there, but it's really about understanding the kind of specific needs and preferences. And something else I'll drop in is a Women's World Banking guidance on design financial products in a way that meets the needs and preferences of women specifically. So there's lots and lots out there on that, but I think tying that in with climate does bring a different a sort of additional layer of perspectives on how we include women in finance in general.
Absolutely. And I think it does really, help to reinforce how important those trusting networks and communities are for women, particularly to help encourage, their adoption of these types of solutions. I'll ask this question to everyone, and maybe I'll ask Tillman to start. What would be one request or consideration that you would like to leave the digital finance community with that would better sort of support small businesses in their resilience and sustainability journeys?
Yeah, I think as a general wish, what we see is in the market a high degree of interest and motivation to take climate actions, but too many hurdles right now. that make it difficult for small businesses to take the climate actions they need to become resilient for the future. And there's a huge risk in it for our economy, for our climate targets, for our societal peace. So looking ahead, we'd really, from Tilt side, like to see more financial institutions working proactively with their small businesses clients on these topics. For example, by providing them with the insights they need through easy to use and easy to access tools, with the insights they need to define and come up with the right solutions to reduce their emissions over time while still being cost effective. So
Wonderful.
more engagement between financial institutions and small businesses.
Thank you. Nelly, how about yourself, or Annabelle?
Yeah, I think mine is probably linked a little bit to what Tillman has said. But my one ask would be about start with the understanding of the communities first. I'm sure we've heard this before, but like understanding what their rhythm is, understanding their risks, their realities, and then think about how do we then align products around what they actually need and trust. Because as we know too often, it's easier to get programs that are designed top down. But if we spend a little bit more time, it will take more time. And I know sometimes it's urgent and we need to do something, but take more time listening to these small businesses, people actually, how they manage their money, how they save, how they recover, how can we co-create tools to match those behaviors rather than trying to replace them. And I guess digital finance can be this bridge that actually connects the community to the projects that we want to have, which are human-centered, which we've heard. So if we do that, we wouldn't just be protecting the livelihoods, but we'll be understanding what systems are needed to enable people to thrive in these challenging climate times. So yeah, that is what I'd say.
Thanks, Nelly. Annabelle, in these final seconds, any additional requests or considerations?
Very quickly, I think to value stability and resilience as much as we value and talk about growth. I think growth is a very exciting story and we all want to get involved in it. But actually, if you speak to small businesses, they're often as interested, if not more interested, in stability and how they can achieve that. And I think that's an opportunity for financial services providers to lean into that interest.
Fantastic. Thank you. Well, I think that's sort of all the time we have for today. I want to thank you all so much for participating in this session and sharing your insights and expertise and raising up, awareness and sharing lessons around how digital finance can support or is beginning to support small businesses with climate resilience and sustainability, but also identifying, where there's still more work to do and where the broader financial inclusion community can support with that. Finally, thank you to the audience for their participation, and have a lovely day, everyone.